To answer the question, Malin, which I thought is one of the best questions I've heard in Bitcoin, because we don't talk about it that much. How would it have performed in the '08 crisis? I think if people knew about the system, and if that system where it was, if it was now where it was, if that happened and it is where it is now, I think people would choose to rebuild on the Bitcoin system because they would be disgusted with kind of like how things were put back together, but there was no alternative. And I think that it's now that you have a $500 billion plus asset class, which is the most powerful digital network on the planet, I think people might look at that and go, I don't want to rebuild this system that put us through hell. I want to rebuild on a different system, on a different platform. Kind of my take.
Just Dom, that's a great point. But and one other thing to think in context here, right? Even at 500 billion, Bitcoin is smaller than many companies, several companies at least in the S&P 500, right? There are $1 trillion companies out there, so you kind of have to judge Bitcoin for where it's at in its place. Right now in its development. It's a very small, nascent asset class. It's developing and getting bigger. And one of the hopes of many of us in Bitcoin is that if you get it to a $10 trillion market cap, a $20 trillion market cap, which may sound crazy, I think it's not. I think it's very realistic in the long term. It's going to have this more of a non-correlation with other assets. So it will be able to withstand those high moments of volatility. It will be able to not have the correlation go to one like Alpha Zeta was talking about. It'll have a sort of an actual function more in the future. It will probably function more like what Greg's suggesting, like an insurance policy, right? But it has to get bigger. And one of the beauty is now we're in this sort of once in a generation build out of Bitcoin as a store of value, and it presents a great opportunity for those who identify what this asset has the potential to be.
So with just never always wanting to have the last word, living in your attic here. In the Canada being the attic of the U.S., gentlemen. I'm shouting down from the attic. In my defense, I did say, I hope you heard this, in a well-developed, efficient market, Bitcoin would outperform. We're nowhere close to that right now. And that needs to be stated again. And Joe and Alpha Zeta are correct that you don't sell what you want to, you sell what you can. And anything that has a bid gets hit, because most of the stuff has no bid. The markets go no bid. Nobody wants to own more of anything unless they're short and they're covering. So in a well-developed market, in a future credit event, if correlations are well understood, you will have non-correlated assets where people will understand the absolute value of a non-correlated asset like an insurance policy. So 100% agree that if we hit a credit event tomorrow, Bitcoin falls in price. I believe it will recover quickly, but who knows? The next credit event may be the last one, because believe it or not, there will be a last credit event, people. It happens until it doesn't rescue itself. And all you have to do is look at countries like Argentina or Venezuela, where they actually have to restructure. So I'm not predicting that for the great USA, and I don't want that to happen for the great USA, but you gotta plan for these potential outcomes, and they are very small, but not zero outcomes. And as we keep kicking the can down the road in the fiat system by printing more money, the probability that something breaks increases. So that again is the insurance side of the equation. But having managed money for a long time in my career, there's nothing worse than getting redeemed. Meaning, your fund is outperforming, but people still want to take money away from you because at least they can say they made money on something. And that's a heck of a job to manage that risk. You're doing better, you're posting positive returns, and people are still redeeming you because they're getting crushed everywhere else so badly. They want to take profits or sell something at a profit. So the world of managing money is very difficult, to each his own, but over time, stressing what Alpha Zeta said, Bitcoin was designed because of the great financial crisis. And I believe in the future, when it reaches its ultimate asset valuation of trillions and tens of trillions of dollars, it will be treated more like an efficient, non-correlated asset. But we're not there yet. So thanks for giving me the very valuable feedback.
Yeah, I think for Steve and Malin, like it's valuable to talk about what ifs. At the start of the show, we talked about a selection that you obviously know we're long on Bitcoin. Last show we made a hypothetical selection for the Ontario teachers. Hafa, you have where that selection is, right? So the all-knowing board, we're a little bit down on that selection, and I'm kind of curious from you guys, hypothetically, if you brought something like this to the investment board and it was down some, what would you guys be up against as far as like members? Because there's a real world to this where you bring something new to a pension fund, and if it doesn't perform well, you guys catch heat. So Hafa, do you have the numbers on that?
I do, yeah. So let's go back and a very quick recap of what we went through in the last time, right? So we did an exercise very similar to the one we're going to do today. So in that case, we went back, look at the asset allocation of the Ontario Teachers Pension Fund. We saw what their allocation was. And then we analyzed and saw, does Bitcoin fit in this portfolio? And our recommendation was to set an allocation that was between 1% and 3% of that portfolio to Bitcoin. This was end of June. Since then, Bitcoin is down. It's down 15%, right? Or close to 15% since that period. So, of course, that wouldn't have helped in the allocation. That was a 2% allocation. The portfolio as a whole, so this is the performance of the overall portfolio in the last 3 months with and without Bitcoin. Didn't change that much because it's a small allocation, but regardless, right? It makes for these are hard conversations to have. We know that people look at the returns on a quarter-by-quarter basis. They look at returns on, if much, at a year-by-year basis. And you would have to justify, if you're a manager and you're down 15%, in the last 2 months, 3 months, that's a tough conversation to have, right? And that's part, I think, of what we've discussed, also thinking about, first of all, sizing it appropriately. It's the key here. So a 2% allocation, even though hurts, it's not going to destroy a portfolio. While on the upside, right, if Bitcoin really captures, as we were seeing, the market cap of other assets out there, like real estate, even part of it, right, real estate, equities, bonds, the upside potential is significant. We say a lot that Bitcoin is an asymmetric bet. What we mean with that is that if it doesn't work in your way, you know what you're going to lose, right? Here, you're going to lose the 2% allocation. That's the maximum you're going to lose. You can't lose more than that. But if it does work, the potential of upside for Bitcoin, as we've seen in the past, is significant and it's massive, right? I'll just finish by saying something that I think it's really important to put in perspective, is that Bitcoin is first of all, it's very early. So an asset that is very early, by definition, will be very volatile, right? Because it's still, there are a lot of people in the market that don't know how to price it. There's some people that price it very well and look at it and say, okay, this is worth billions of dollars. There are people that look at it and say, this is worthless, right? And you have everything in between. So this leads, of course, to volatility if the players come in and out of this market. But second, which I would say about the overall portfolio, is that on the long term, right, when you look at the performance of Bitcoin does two things most of the time. It's either going sideways or it's I should just share the I don't know if I'm sharing the right. Can you guys see my screen?
We can now.
Okay, perfect. So yeah, so this is a transparent. It's there in the Nakamoto portfolio website. So the performance is there. But just to finalize, I was talking about Bitcoin's return. Most of the times, Bitcoin's an asset that stays sideways or going down, right? The returns of Bitcoin historically have happened in very short periods of time, which make these conversations even harder because you are going to have 11 months out of the year that you're basically going to look at it and it's either not going anywhere or it's actually going down if it performs the same way that it has performed in the past. And then you're going to have very short periods of time that is performing extremely well, right? And you can see that in the returns, which is usually what happens. By definition, just I think something important to highlight is every 4 years, Bitcoin has this event that is called the halving event. So what happens is that the issuance of Bitcoin is cut in half, right? in order to get to the maximum of 21 million Bitcoins that it's ever going to be issued, it's a declining curve. So every 4 years, there's less and less Bitcoin being issued. So if you think about in terms of the terms that we're used to in the financial system, this is kind of like declining inflation that is programmatic, right? So instead of having inflation that you don't understand, that you don't know how much money is going to be printed, the inflation Bitcoin is pre-programmed, it's written in code, cannot be changed, and it will eventually lead to the 21 million Bitcoin at the end of the day. But I'll stop here, and then we'll go back and we'll do the same thing, I think, for the Wisconsin fund here.